So the futures market is set to open up significantly down. In Asia right now, they're hitting circuit breakers in the stock market. So we're looking at 10% down, 12% down. I think Taiwan, China, Singapore, Japan, all circuit breaker stock markets. So, and this is all Trump tariff. So I just, disclaimer first out, I did study economics at university, but obviously it's not my day-to-day job to be an economist. But at the same time, so you may not deem me qualified to comment. Totally, I agree, I'm probably not. But I'm trying to get my head around it, probably just like you are watching this video. So I'm happy to get your critique, your opinion, what you think. Now, first point is the narrative that they're coming out with, or Trump's narrative, that he wants to level the playing field between the US and the global trading partners, so US outward. So fine, that's his narrative. So, and he's willing to take short-term pain for long-term gain. The next narrative he's running, again, I might be getting these wrong, but from where I'm sitting, the next narrative is the reindustrialization of the US. So bringing back factories, bringing back manufacturing. And the suggestion is that that will bring back jobs or more jobs. I mean, America doesn't have a jobs problem right now. Was it 4%? So this will be bringing back an even better employment situation. Or maybe, I think some of the narrative seems to be around reviving towns that were once manufacturing hubs. So fine, I'm with you on the narratives. And then I think there's some more, but those are kind of the two main sticky ones for me that seem to be coming out. Oh, and then obviously the trade deficit. So I've got a few issues. The first one with reindustrializing America. This is a 4-year term that Trump gets. If you're a company and you're about to spend $1 billion on a plant in America, you're going to question what happens in 4 years' time. You know, you sat around a boardroom table, you're wondering whether to wear the costs of the tariffs coming in or setting up a plant in the US. Are you going to go, well, let's just wait the 4 years. Let's just wear the costs. Let's pass it on to the consumer. Our import costs have the tariff on. It's just the price is just going to go up for the consumer, for the US taxpayer. So it will be like a tax for the US consumer. Okay, other companies, sure, they may, and I think there's already promises of various production facilities that are going to be built. So maybe we'll see some. I did read a report about, during his last presidency, the steel tariffs brought around 1,000 to 2,000 jobs to the US. That's not a big number. So, and that was all that was gained out of that steel production coming back to the States. Just going through my head right now is that national security issue that people are going after, that some things must be done in the States. I kind of agree. Someone mentioned drones. You need to have your own drone manufacturing plant in your home country for national security. I guess now, because as we're seeing in the Ukraine, drones are a weapon of war. So you must have the ability to produce those. I guess a bit like shipbuilding, submarine building, tanks, guns. Like that needs to be onshore potentially. So I get it. But I just want to walk through some economics. Again, totally get, I might be way off, but let's talk about it. So we've got this is, I've had, obviously each moment, because I'm involved in the markets, I'm constantly thinking about the impacts. So while my approach may be naive and behind and totally off, I'm happy to explore it and to stick it online and to get your comments on what you think I've missed or not missed or got right. So manufacturing, I've made the point, it's a 4-year term. Companies will be hesitant to invest when it's 4 year. I just think that's factual. Labor, what labor is going to be used? Are these factories going to be robots? Because if that's the case, there won't be so much labor where you'll get one person potentially overseeing the robots, maybe 100 robots to one person, something like that. I don't think the shops in Cambodia and Vietnam and wherever that are making your clothing or your shoes, will that be brought onshore with headcount? I don't think so. That will be brought onshore with robots, maybe. So I'm not sure about this whole labor thing happening with manufacturing being back onshore. The prices of the tariffs definitely will result in increased prices. But I think because of the demand impact, that there'll be downward pressure on prices, if that makes sense. The import company will have to pass on the increase in the tariff, and that will pass downstream because there's just not enough margin. Most industries operate on really tight margins because if there's a big margin gap, other players come in. So I think the only result will be an increase in prices. And why I think I'm not wrong on that is because gold has continued to at least hold steady or increase. So gold is seeing inflation. And so I think prices increasing on the back of tariffs is the correct play. That's what the market's saying. And the market is rarely wrong. Okay, demand is going to go down because of these prices. The market is definitely saying that. Or was it 7 trillion or 7 trillion's been wiped off the stock market? So demand has definitely been hit. Now, that brings about rates pressure to the downside. Trump is a big advocate for low interest rates. I don't feel like interest rates are high at 4.5%, 4%, but he wants them lower. I mean, he's been very vocal. He definitely wants lower rates. So that I feel is a Trump. He wants to achieve lower rates, and you can achieve that by slowing the economy, because then your prices will come down, your demand will come down, and naturally the rates will start pricing in cuts. Your global orders into the US will go down. This is where I'm starting to make guesses. I'm now surmising that the rest of the world will receive less orders from the US. And so I think what Trump's playing here is it's going to hurt America, but what I think he's actually doing is he wants to hurt everyone else more. So yes, the US is going to take a hit on its GDP numbers, but I think he thinks that it's going to hurt China more. It's going to hurt Vietnam more. It's going to hurt UK more, Europe more. I think he's going for that. Yes, it'll hurt us, but it'll hurt you more. That's my take on what he's actually doing here. So yeah, I'll put not US, as in it'll hurt the US less. It's going to hurt not US more and US less. And then there's obviously this government revenue part where the tariffs will raise government revenue. I really don't think he cares about that. I don't think that's like, it's not going to be close to the trillions he would need to make an impact on. And I don't think this whole getting rid of income tax is going to work because the state is so much bigger than when the US was run with no IRS. So I think that's a nothing. I think it's a who cares. I think his biggest thing is hurting China. I think because they're the second largest economy, I think he thinks that this will hurt China more than it will hurt the US. So he's trying to weaken, I don't know if you can see this, the rest of the world and potentially break the rest of the world. I think that's his take here. And unfortunately, this drop in demand and these global orders, the kicker will be if US companies sack people. You're supposedly going to loop them back in with manufacturing, but will that happen at the same time? Will people lose jobs, but at the same time be taken on by new? This is where I think it's a real, he's really taking a risk here. And he obviously thinks it's a risk worth taking. I think there'll be a lot of pressure on jobs because of the decrease in global orders. He's banking on that hurting the rest of the world more than it will hurt America. That's my take. He'll get the rates down. He'll be able to refinance all the debt that's coming through this year. Again, I kind of think he doesn't care about that because how's he going to sell that as a positive? Oh, I refinanced the debt % less. I just don't think that's it in the parks. I think he wants some manufacturing brought home. I think he wants rates lower. And I think he's trying to weaken the rest of the world compared to the US, even at the expense of hurting the US. And at some point, this will all bottom out. All these chips will fall. And maybe from that base, he's got a plan on that being boom time in America. Does that stitch together? Does it agree with his narrative? Does it agree with what the market is saying? Because often the narrative and the market are not in tune. The market still has prices going up. and it has demand going down. And it would probably indicate that unemployment rate for the US will go up, at least in the short term. So that's my tariff thoughts. How to play it? Well, we're assuming the US market hits circuit breakers tonight. Or well, for you, the daytime, if you're on a US time zone, me on an Asian time zone, it'll be tonight that the circuit breakers will hit. Will this be the low? I don't know. It's hard to tell. But people with cash will be looking to buy value stocks. People that are getting liquidated because this has been a sharp and nasty correction. Just good luck out there. That's it.